Released its economic report for the third quarter of 2019, which showed a marginal improvement in federally collected revenues for 9 months ending September to 7.2 trillion naira from 7.0 trillion a year ago. Now, in the fixed income and equities market, there was a bullish performance yesterday. And joining me this morning to discuss this is Adedayo Bakare, macroeconomic strategist with Afrinvest Securities Limited. Dayo, it's good to have you with us.
Thanks for having me.
Okay, one of those rare moments. The equities market recorded strong performance yesterday. So, is this sustainable?
I mean, it's too early to tell.
Yeah.
But from we've actually seen, improving sentiment since last week. So last week we had gains on 3 or 5 days. And the opening of trading yesterday, we also saw a very strong performance of 0.4% gain in the market.
Yeah.
Now, also in terms of when you think in terms of the performance across sectors, it was basically mixed. So we saw an even split between gainers and losers. But it's quite encouraging, given that 4 out of the last 6 trading days we've seen positive performances. However, it's a bit too early to tell what is the major driver. Funny enough, it has coincided with CBN's latest policy restricting corporates, individuals, and non-bank financial institutions from participating in the OMO market. So earlier on, there had been expectations that some of those flows, liquidity in the market, could flow into equities. But it's still very early to tell, because even when you look at equities, the underlying performance and performances that we saw in Q3 was not very strong across a lot of sectors, especially the consumer goods sector. Also, when you think of the broader investment environment in Nigeria, it's not particularly encouraging. So we're on the look to see if this can be sustainable for now. But we think
in other words, there's still a question mark on that, as it were.
Exactly.
All right, CBN's recent decision to restrict local corporates, individuals and non-financial institutions from fixed income markets continues to shape investor decisions, no doubt. So what's the impact on trading so far? Yeah,
so since the policy, we've seen, as expected, because PFAs, for instance, that is pension fund administrators, insurance companies, the non-bank financials, they always have a lot of liquidity that they need to invest. And the Nigerian market has changed somewhat since 2017, because really what you see in the market now is the government is not issuing a lot of treasury bills. In fact, since 2017, they've started redeeming treasury bills. Okay. Also, in terms of bonds, they are not issuing a lot of local bonds, because the recent strategy is to issue more of external loans, which attract cheaper interest rates compared to local loans. Although we can talk about the exchange rate risk attached to that, but that is what the federal government is doing currently. So naturally, liquidity will find investable assets, and that is what we've seen. So a lot of the players have been exempted from participation in the OMO market, are going into treasury bills, are going into domestic bonds. So there's been a lot of demand in those two markets, and the results has been that yields have moderated sharply. Also, from what we saw last week, there was a primary market auction of treasury bills as well. And what we saw was that due to recent policy, government's borrowing is now very, very cheap, because treasury bills were issued at cheaper rates. So you had, for the longer tenor, 362-day bill, you had a reduction of 1.4% in interest rate, which is actually quite significant. So those are the effects we've seen of the policy so far.
All right, the effects so far, but what are the major benefits of having this policy in the first place?
Okay, so like I said earlier on, the moderation in yields could be a good thing for, say, the federal government, and also corporates who are looking to go into the debt market to issue, to raise financing. So for those two institutions, you could see a reduction in interest rates for them, which is very, very good for their position. For the investor base, for the local investor base, it becomes difficult for them, because investing in OMO, treasury bills, and bonds have become, quite attractive of late.
Yeah.
So they will need to, start thinking of new strategies to actually deliver the returns they've been seeing before. So that could be a bit challenging for them. For the bank itself, it's actually a strategy to segment the market into two. So with the current strategy they have in place, they'll continue to attract FPIs in the OMO market, offering relatively higher yields, while at the same time the government can issue at low interest rates. Because what we've seen with most of the CBN policies of recent is that it's actually affected the local market. So when interest rates should have come down, interest rates have not come down due to the desire to retain capital flows and attract capital flows. But with this, there's a bit of a balance. But obviously, we're watching also to think, to see how investors perceive this policy, because in the end, it's a policy tailored to keeping and attracting investors into the market. So we're going to see how they react to the policies.
All right, interesting development there. Now, your expectations in both equities and fixed income markets for the rest of the week?
Okay, for the rest of the week, we see the same pattern playing out. In equities, you most likely see there's room for profit taking now. So you might see on some counters investors taking profits, because it's still the fact that long-term confidence in Nigeria is weak. So that is when you have all this very short-term gains. People want to, investors want to take out profits. So you could see a bit of that pattern play out, and hopefully we see a positive return this week. In the fixed income market, we're likely to see the same trend persist. Last week, what we saw was a very sharp moderation in yields in treasury bills and in the bonds market. And from early indications this week, this is very likely to continue. So we expect a bullish performance in the fixed income market. All
right. Now, in other news, there's been marginal growth in government's revenue performance this year. So what drove this performance and implication on government's budget so far? Okay.
The increase has actually was marginal, very marginal. And in 2018 there was an improvement, a much faster improvement in revenues.
All right.
Now, the challenge the economy is facing, or the government is facing this year, is because oil prices have moderated.
Okay.
So in of like $74 per barrel, but what you're seeing this year is hovering around $63 per barrel.
Indeed.
And oil production, which is also another major factor. We've seen a reduction in oil production. Q1 2019, Q2 2019, we've not seen a very, very decent performance in terms of boosting our oil production. And the implication of this is that oil revenues is contracting. And as we know, oil revenues, are like more than 50% of total government revenues. So that is really the major pressure point for government now. But on the other hand, non-oil revenues, we've seen improvement. In terms of tax collection, customs duties, we've seen a bit of an improvement in those areas.
Yeah, interesting development. On that note, Adedayo Bakare of Afrinvest, I'd like to thank you very much for your thoughts on this.
Thanks for having me.
Have you.